This might be the most informative, educational episode I have ever done. It is long, but it is so jam packed that you're going to want to sit and take notes. I mean, we talk about so many awesome things. I have on the show today Emily Bryant. Emily is a tax professional helping the teacher seller community learn and understand their tax obligations, how to minimize their tax liability, and outline record keeping processes that help take the stress out of tax time. Meeting with her to talk about the financial side of your business has been described as talking to a good friend over coffee. She's easygoing and loves to answer your questions, and hopefully, she'll answer some of them during this interview. She definitely does. And if you want a more tailored experience, you can definitely go to her website and schedule time with her one on one. We get into all of the tax questions, even into sales tax, LLCs, business bank accounts, 1099s, S Corps, all of the things. So during this tax season, you definitely don't want to miss this episode. Let's get started. Welcome, Emily. Thanks for being here.
Thank you so much. I'm happy to be here.
Yes, I am really excited to talk about taxes, which might not excite other people, but we all have to do them. So it's really important for us to know the correct way to file our taxes. So I'm excited to have this conversation. It's perfect timing. We are right in the middle of tax season right now. So tell us a little bit about you and how you got started helping TPTers with tax stuff.
Of course. So I got started, I think, back in 2017 with my business and did not have a direction on clientele at all. And I feel like I got really lucky. I had one client who lived in my zip code who was on TPT, and she had been in my ear for years about like, Emily, the space needs your help. Like you could totally you could help so many people. It would be great.
Yes.
And I was like, yeah, of course, for sure. And then I think 3 years later, I finally kind of bit the bullet and realized how great of a community it is. I feel like I grew up with a lot of teachers, and so it just made sense. Like a lot of teachers, a lot of coaches, and I really like the community and the type of people that are in it.
Yeah, we do need help. We obviously taxes are not our area of expertise, but with all of these teachers starting their own business, having these side hustles, like we need to know the correct way to file our taxes, write-offs, 1099s, all the things. So I can't wait to dive in and ask you everything. For me
Absolutely.
personally, but also for all of our listeners too.
Yeah, it's a scary space. And I'm always happy to share my information and try to help it be a little easier, smoother, and less scary.
It really bothers me that taxes are scary because we all have to do them, but I feel like they're unnecessarily complicated. Um, so yeah, I it's good to have someone that knows what they're doing so that we don't make any big mistakes that might cost us something. So we have a lot of teachers listening that are in a lot of different stages of their business. Some are just getting started. I feel like when you're kind of tracking your income for taxes, a lot of people tell you to start your own separate business bank account. What do you kind of say to that? When should we do that?
I am a huge, huge proponent. If you do nothing else, do that one. You could do nothing all year for your bookkeeping, and you will be less stressed in tax season if you have your business separated out, like business bank account, like all of like that money separated out. And what that can look like is just opening a separate personal checking account. Like if you are not an LLC, you don't need a separate business bank account. You only need that if you are an LLC or incorporated or something like that. But if you just like you're up and starting, get yourself a separate personal checking account that you are dedicating only to business. And that will save you so much time, energy, and crying.
Yes.
Uh, on like when you're trying to like you force yourself to sit down and like look through all of your stuff because it's so much easier to look through one set of bank statements than having to go through everything that you spend personally, like on yourself, on your kids, like that, like all of like trying to go through, remember all your Amazon transactions that happen that were like for business. You don't have all of that extra work. You just have that neat and tidy bank statement of these are all the things that happened, which means that you have hyperwallet depositing directly into that bank account. And that doesn't mean you can't, like, you don't touch that money. Like, if you need it, pull that money out. You just transfer it to your other checking account. But you have all of the income getting deposited into it. You have all of your expenses being pulled straight from it. And so that can be the crux of your bookkeeping, really. Like that is the baseline, and you save all of the time of having to scour through your 5 credit cards, your bank account, your savings account, any other account that you have, your Amazon. Like you don't have all of that extra work. It's just all neat and tidy in there. As And yeah, do that at the beginning, from the very beginning. That is the best piece of advice I can possibly give you that will save you a lot of tears.
I agree. I waited way too long to do that because no one really like made me do it. Um, man, it was so much easier when I separated everything out. I have a separate credit card just for my business, so all of my business expenses are made on that credit card, and then I pay that credit card off with my business bank account, or like you said, that separate personal account. Oh my gosh, so much easier. Why didn't I?
So much easier. Yeah. And that's the thing is like, I mean, you're an entrepreneur now. Like, no one's going to make you do anything. It's up to you to find the information or, listen to the advice and then apply it. So, like, I can harp all day and be like, separate your business and personal. But if you don't take that step to do it, then it's just not going to be fruitful for you. And there are like business bank accounts that are free.
Yeah, my business bank account is definitely free. And this is just a pro tip that really doesn't have anything to do with taxes, but I opened a business credit card, and this is like Emily was saying, only if you have an LLC, which I want to touch on that in just a second, so don't let me forget. But my business bank account has these I treat it like a debit card, first of all. I didn't open like this huge line of credit, but it has these perks. So I have this specific type of card that gives me money back on ads, on ad spend. It's like 3% back on ad spend, which is really crazy. So look into that. If you have a business bank account, you have your LLC, look into getting like a business credit card that has some perks and use it like a debit card. Just pay it off every month, and then you can really save money, even earn money. So that was just like a side note. Let's talk about LLCs. Do you have any advice on when to get your business license? Any suggestion?
Yeah, so like, I mean, you need to get a business. If you are going into business, typically you need to check out your like city and county, and if they require you to have a home-based business license or home-based occupational tax is typically what it's called. We'll see if you need that first. And then if you do, like, really, an LLC just is a legal term. It doesn't change how you're going to file your taxes at all. So, somebody could be just started their business. They're just a sole proprietor. They're filing their taxes, like the business portion of it, on their personal tax return on Form Schedule C. Somebody else could be like 2 years into their business, making some money, still a sole proprietor, have an LLC. They're still filing on Schedule C. So it does not change what's tax deductible, anything like that. So the considerations are really just legal in nature. And the risks with, like, if you're selling solely on TPT, are all like the copyright infringements and stuff. Like, that can be scary, but also we know that it's somebody's going to send you a cease and desist. Stop. And maybe don't plagiarize and don't have any copyright infringements. You are able to sue somebody else with it, for if they're copywriting you. You don't need to be an LLC to do that. You can do that yourself. So the times that I'm looking at is, are you working directly with kids? Are you working, are you selling physical product where somebody can, basically the people for the reasons that the warning labels are created. That's that's why you would want to be an LLC.
Right.
Or if you just have like if you have a lot of assets and you're like, I really want this separate,
Yeah.
that could be enough. Each state is different on how much they charge for an LLC. Like, I know Texas is like $750.
Yeah.
Georgia's only like $100 to start. Or
Right.
wait,
I think
100 bucks, I think.
or it's 50 when,
Whatever it was, I can't remember now.
yeah, it's cheap.
Yeah, it's not like,
I
it's
think
very
California
different.
is insane. Yeah, it's different per state, which is crazy.
Yeah, well, each state loves to have different rules. Yeah, so that's what I say with an LLC. But if you do become an LLC, it means that you've created a separate entity, which means some of the advice that you're going to see online and look for, like creating a separate personal bank account, isn't going to be right for you. You need to have a business bank account. It needs to be in the business's, like the LLC's name, because if it's not, now you are what's called piercing the corporate veil, and you are mixing business and personal, and you basically just like shoot yourself in the foot for having created this LLC. But should you ever find yourself in a lawsuit, which I hope nobody ever finds themselves in, and a judge or somebody is looking through and they're like, oh, well, you're mixing business and personal, they can just strip that protection right away and the whole point of the LLC just gets blown up.
Right.
Like you might as well have just been paying for insurance that would have done more for you than this LLC did
Right.
because of just how you have that set up and needing to separate the business and personal.
Yeah, I feel like a lot of people are confused and they don't think they actually have a business until they set up their LLC, but it's really just a protection of your personal assets if you get sued. Like that's all an LLC does. It's not like, oh, now you have like an actual business. I mean, you're a sole proprietor when you start making any money. So consider yourself a business. And then as far as when to get an LLC, like you said, I feel like the
I
team,
like to take that a step further, Lindsay. The IRS defines a business as intent to make a profit.
you don't have to make a profit.
You don't have to make a profit to be a business. You just have to intend to have made a
Okay.
profit and like do the actions that like go along with trying to make a profit. And some people aren't profitable in their businesses, and sometimes they like kind of like the failure to launch situation. In not necessarily like the TPT space, but like in every industry where there's all of that initial investment that
Right.
goes into it, and then it like crashes and burns. But in TPT, it's nice like that space because it's really low overhead, really low startup costs. You can just kind of get started. But yeah, the IRS does not require you to make a profit to be considered a business. It is all about intent.
Okay, so business bank account or a separate bank account, personal or business. That's what we're going to do. Step one.
Step
Um,
one.
now, when you are first starting out on TPT and you're not necessarily making a lot of profit, it's probably going to be pretty easy to do your own bookkeeping to figure out filing taxes on something like TurboTax, right? Or even like your however you file your personal taxes. It should be pretty simple to also file your business taxes too. So
Yep.
I get this question all the time. So when should I reach out to a CPA for my business specifically?
So my favorite people are the ones that are proactive and they are they're in like year one and they come to me, and typically I don't offer any services to them. I offer them advice.
Yeah.
And so they come seeking knowledge and how to structure, and then they're able to kind of like implement that. And so my advice is always to like go talk to somebody, whether that's me, that's somebody else that like knows the space, in order to do basically like a tax efficiency analysis. That's what we call it, where you are just planning and understanding what every like business deduction can be, because so often people get started and then they don't know what is a deduction or what does count
Right.
as a deduction, and so then they end up like missing things, or how could they structure certain like travel that you could turn that into a business deduction, but you have to know all of the ins and outs and intention before you go and all of that, like, and what to track, what is deductible, what isn't deductible while you're traveling, because like that can get a little bit more complex. So my recommendation is talk to somebody, like try to seek knowledge as early as possible. But you're right, there is TurboTax, there are spreadsheets out there, there's especially if you separate your business personal bank accounts, it's not too bad, and think like TurboTax will walk you through it. There's like really like basic things like the home office deduction, any mileage, those things like TurboTax handles well. If you're going to get into more complex tax strategies like hiring your kids, maybe a 14-day rental agreement, the Augusta rule, or like those traveling things, like those are where there would be additional filing requirements to different agencies, different types of taxes that are involved. That's where I think you definitely want to bring in a CPA to just make sure that those are all being handled appropriately.
Yeah, I think that's when because my husband is actually an accountant, but he is not a CPA. He did corporate accounting. So he does my books and all of that. But when we started having questions about, okay, so I work from home, like you said, home office, driving to and from the post office, or if I'm shipping things, what exactly are the rules? And we want to make sure we're doing everything correctly in case I mean, just because we want to follow the law, but also in case we get audited. We want to make sure that we have all of our ducks in a row. And that's when we reached out to a CPA. And they also helped us file our S Corp, which we can talk about in a second. Okay, so when you have questions about like write-offs and deductions and things like that, that's probably when you should hire a CPA. But like you said, reach out. A lot of CPAs have kind of free consultation calls. You can get some free advice and see if you like them and want to hire them in the future.
Yeah, a lot of the time, that is the case. I know for me, when I can already tell immediately that I'm like, oh, you are not a fit for my service. Like you don't need my services yet. Like you might grow to a point where that makes sense. I turn that discovery call into how much pieces of advice can I give you in this 30 minutes?
That's awesome. Because not
And
all.
it's just like, yeah, you're just gonna have like a mini tax efficiency analysis where we're gonna try to talk about answer your questions and basically just pump you full of information that's gonna help you and kind of take those like anxiety levels and just bring them down. Like,
Yes.
oh, okay, now I understand what is a business deduction and like what can count.
Right. Okay, so let's talk about that then. What is a business deduction? And specifically for TPTers or even just digital product creators, what types of things can be deducted? I know that's a long list probably, but
I mean, yeah, it's a long list. But it's anything. So like this is like the in a nutshell, the IRS, it's anything that is ordinary to your business and necessary to running it. And so what might not be ordinary to one person, where you're like, I don't have any marketing, I'm not on social media. You might not need a ring light. It's not necessary to run your business because you've got no marketing strategy behind having that. So like, why would you buy it if you bought it, but then it sits in the closet? Like if you're not using it, like then that's not a business deduction. But and so like for me as an accountant, not that many accountants are gonna own ring lights. I own two for like a while because for I was on social media for a long time doing little skits trying to educate educate the world a little bit more on what is and isn't deductible. And so that's really what it comes down to. And so if it meets like those two test like that test of like has to be ordinary and necessary,
what do
like
you mean
simple
by ordinary? That's confusing to me.
like ordinary be like, okay, so would it make sense for you to buy cat litter, Lindsay, for your business?
Okay.
For like any type of like your type of like would any TPT seller, would it make sense for them to buy cat litter for their business? Could be, but no, it's not. But if it were for your business strategy where you're like, okay, well, I'm doing some sort of creative classroom thing, or I'm doing a series on ice safety, you can use cat litter to like put on the road. And you now have like that is like grip and it like well, it's like a de-icer or like candy used. And so if you were doing like a show or like a reel on that, or it's part of the little curriculum that you're doing, and like there's like a video thing with it, like, yeah, that's kind of ordinary for what you're doing, but as a whole, it doesn't make sense.
Okay.
And so that's why, like, if you get creative with it, like, I'm sure we could think of other things that are like, no, that's not ordinary. Like, that's not normal. But what makes it ordinary is the necessity part of how are you using it. So just because it's not ordinary for every other TPT seller out there doesn't mean that it's not ordinary for you.
So I'm just thinking of things, not cat litter, but maybe other ordinary things that TBTers might be purchasing. So like clip art and fonts, those would be
Yep,
write-offs. Even like if you're joining an educational course to learn more about your business, that would
yep,
be a write-off, right? Or a membership. Can
absolutely.
you think office supplies, printer,
Any office supplies,
printing off
the
things?
commissions, any merchant fees that you're paying, like so the
I feel like that's a
hyperdwell.
big one that's missed.
Yeah, that's the first one I look at on every tax return that I review. When I look at the prior years when I didn't file it, I'm always like, did you have commissions like taken out? Like, how did you do this? Because
Yes.
that's your biggest expense. That's going to be most people's biggest expense. It's going to be any of that, excuse me, that ad spend that you were talking about. Um,
The TV.
things that are like mixed use, like your cell phone or internet, those things you would need to come up with a what is that business use percentage that you're using that. And so that can be like time, that can be like if it were the internet, like what percentage of the bandwidth or the gigabytes, is that right? Or like however much you're using. Just you need to come up with something reasonable to have separated that out.
Okay.
And so that's a big one. Like, so same with like printer, if you're using your printer a lot for business, but also for a lot of personal stuff, like then you need to come up with like kind of a mixed use percentage for that. And that can be things like how many like total pages printed, how much of them were for business, right? Like, or how much percentage of the time. I prefer, honestly, I have a tendency to just prefer a gut feeling on what that is. And then should you actually be under an audit, try to find a way to kind of back that up. But the stress involved, because a lot of the times an IRS auditor will like, well, how did you come up with it? And you're like, well, this is kind of a gut feeling. But the fact that you've already, as long as you're like, it's 100%, you're like, okay, but is it though? I can say yes, because I don't print anything other than tax returns sometimes. But even that is rare. But having separated that out is already like a good sign that you've thought about it.
I can already like hear the thoughts that are going on in a teacher's brain right now because we're rule followers and we want like set guidelines, and I know that's making them nervous. Like, what do you mean a gut feeling? Like, I need that
Gut feeling. Well, yeah, which is why I listed the like number of pages. But you know how tedious that is, Lindsay? That is awful. That sucks. That makes people not want to do the record keeping. And that is like the worst thing that can happen.
Yeah.
And so my goal is to try to minimize that audit risk while still being able to get the deduction without having you freak out that this is overwhelming. You have to do too much. You're learning too much at the same time. Like pick a number, stick with it. If you want to be super conservative, like follow 50%. Even though you're like, it's probably more like 80, but like I'm going to say 50. Like be conservative about it if you want.
Okay, that's
you're
a good.
Still going to get some deduction. It's going to be better than just freaking out and like I'm not going to claim it at all.
Yes.
So that's my whole goal for people is to lower that barrier to entry and just understand the risks that it is. And it can be like, I always like to put like a dollar amount. So let me do a quick calculation for you because I think this can be like really powerful in understanding. So if you had a printer, say you spend $500 for all like your printing supplies. It was $500 for like 100% of the time. That saves you roughly $150 in taxes. So the worst case scenario is that the IRS comes back and says you cannot have that $150 of deduction at all. That's not going to be the case because you are using it for a certain percentage. You could go back and look in the history of your printer and see like all that you printed off. Okay. And you can probably recreate that. So even if that's just 50% of that 100, like it gets lowered by 50%, we're talking $75 for like the whole year. Sometimes like I will, and it's the same with like for mileage too. Like if you're tracking mileage, it's like 19 cents per mile is the tax dollar roughly that you're saving. And I'm like, you know what? I would rather pay that $75 or that 19 cents to not have to track it.
Yeah, it's a lot.
And so looking at that cost benefit. So even though you could be following the tax law to a T, at what cost?
Right. How much time is it taking you? How much
time is it taking you? Right? Where it's like you're already like many TPT and many TPT sellers are still working full time. They're doing this in their spare time. They've got kids, like they're running around, like they barely have time. And so when your time is at a premium, let's not stress about the things that are not going to have a return, basically. So if you're like, oh, I would need to like track all my mileage and Dollarama is a mile away, you're like, cool, here's 19 cents. You're like, oh my God, I like spent way longer trying to track that and stressing about it and stressing about not having tracked it. And it was only 19 cents.
Right. Not worth it. Two questions popped in my head that maybe teachers are thinking. So one, we talked about like having the separate accounts and paying for expenses out of that separate account with things like internet or phone. How does that work? Because you already have it for personal reasons.
That is a great question. And so I always say if it is used for business less than 50% of the time, it has no business being in your business accounts. In terms of being paid the full amount. Now, if you are not an LLC, it doesn't matter. The IRS does not care.
Okay.
Okay, doesn't matter. If you're an LLC, it matters because now you're mixing business and personal. Right. Because if a judge is looking at it, they're like, well, okay, you use your cell phone for like only 20% business. Why is the business paying for it? It's paying for something personal. Now it just looks very personal. And so my recommendation is almost always to like, it's the same with the home office deduction. Like usually it's only like 15 to 20% of your house. And so if you're paying your whole mortgage and all your utilities from your business, like that looks fishy because it's like only 15% of it is used for business.
Right.
So that is where a reimbursement comes in, where your business can just like reimburse, like just transfer money to yourself personally for that portion of that expense. So
Okay.
anytime you have your cell phone bill or your internet bill, I usually just lump in the internet with my home office, just because I don't want to go do that exercise we just did of like, okay, I got to figure out how much this is. This is extra work. Like I can just lump it in my home office and I'm going to be fine.
Right.
It's still a conservative approach and I'm still getting some deduction for it, but I'm not bending over backwards trying to figure out how much is being used by who in the household and all of that. That is the how I like reimbursements for that. Because then you still see it happening in your business bank account where you're just like a reimbursement for that. And you can do that at the end of the year, once a quarter, once a month. I have a preference for once a month, but it can also just be done once a year.
Okay. And that would just be a line in your bookkeeping, like
A
for you,
line in your bookkeeping, yeah.
whatever. Okay. Okay. The second question I had, and hopefully this will like ease some anxiety, is let's say that someone did get audited and like you said, the IRS says like, well, this deduction is too much. You overestimated. Like, what's the worst that can happen? Are we going to go to jail? What would happen to us? And obviously it
What would
depends on
happen?
like
The
it,
worst things in the world, which would be somebody telling you you're wrong.
yeah.
That's the worst. The worst thing is it's a money thing. Like you're not at least the clients that I work with are not grossly overestimating these
Right.
things. So if we use that printer example where it's $500 and they're like, nope, you're not, like you don't, what's going to happen is they're going to recalculate your tax with having that removed. So
Yeah.
basically they're going to recalculate your tax return without that deduction, and then they're going to send you a bill.
Right. That's
They
it.
say, here's a notice, and that's it. And like some penalties and some interest. And you're not going to jail for that.
Right.
The only time you'd be going to jail for that, like first stuff, would be is if you were committing fraud or grossly misstating things, usually intentionally, like materially misstating something, which is basically like, I think the threshold was like 10% of your like income. So like if you messed that up by 10% of whatever like your earnings were, then yeah, that would be. And that's like on your like full tax return typically. Yeah.
That
No,
would be remote.
worst thing is that you just have the anxiety of having an IRS auditor like
Right.
talking to you and you're like, ah.
Right.
That's scary in and of itself.
So it's not scary. Not super
It's
scary.
not too scary, other than the fact that it just is scary and you're like, okay, it sucks.
Yeah.
But I also always tell my clients that the reason I spend so much time with them on these are the records you need to have is because if you were to be in an audit is not scary if you have the records,
Yeah.
like at all. I have been in a few audits, not for myself, but representing clients where it's like they ask for something, I'm like, yeah, here you go. And they're like, oh, wow, that was fast. Like, yeah, because we have the records.
Right.
And it's all the people that don't have the records, excuse me, that are taking months to like recreate their mileage log where the IRS is going to be like, okay, well, obviously you've recreated this.
Right.
And like, no, you've taken time and you didn't have this and you needed more time to get your shit together. Sorry.
Right.
In order to be able to like give us the information that we need. But if you're able to give something to them like immediately because you are organized, you have like all of that record keeping, like just like at the ready, should anybody ask,
Right.
it's not scary. You're like, here. And they're like, oh wow, this is amazing. They love it. They love it.
Another reason to keep everything separate and start doing your bookkeeping, which just means how much are you earning, how much are you spending, and what are you spending it on. That's it. That's all bookkeeping is. So,
Well,
okay.
there's more to it. I would argue that there's more to it, just
Well,
making sure all these like little checks and balances. But in a nutshell,
oh
yes, that is.
God. My
But we
husband
don't
talked
need to
about that
like
all
get into
day.
that.
So I'm a former math teacher, and that math does not, like, my brain cannot. I
Cannot
cannot do accounting math anyway. So maybe hire a bookkeeper for that if you want to do that. Um, okay. This just came in my mind too, because you said you are in Canada. So we do have Canadian teacher sellers. What do they need to know that's different from US sellers?
Well, so I now live in Georgia, so I've lived here for the last 10
Oh,
years.
I didn't know you're in
So
Georgia.
I have not done Canadian taxes in ages.
Okay.
I think the last time I was in college, and that was when I like did, or I was just getting out of college, and I did one month at BDO because they needed somebody. They wouldn't hire me because I told them I was getting married and moving to the States. But then they were like, "You were so honest about it. Could you come help us for just a month?" um, And so I did that. But so I mean, for Canadian sellers, it's very similar. You still get the same deductions. Like accounting is accounting wherever you go. So the words might be different. The US for our home office deduction, it is you need to you need to use the space regularly and exclusively for business.
Mm,
In Canada, it just needs to be used regularly for business. And then if it's not exclusive, you would just take a business percentage of what that time was. So for example, like in the US, I couldn't be using my kitchen counter. Like
okay.
that is mixed use. But in Canada, you would just need to figure out what that mixed use percentage was. And those are really like the main differences, like the other than just the rates for depreciation, things like that. Like those change, but the basics of report your income, here's your deductions, like those are all the same.
Do you happen to know anything about like Australia, New Zealand, the UK? Because I have listeners there too. Or do they just need to look on their government website and figure that
I
out?
think it's just look on your government website. Those ones I don't know as well.
Okay.
I did look into a little bit of Australia recently just to see what their verbiage was, but it's similar. Like I think I had a little bit of a here's the words of what's deductible, and it's like it's all the same. It's just different, like differently packaged,
Right.
and it's all just like if you need this for your business, that's a business deduction. So
Okay.
don't buy your kids toys and call that a business deduction.
Right.
Like not a business deduction.
It's a lot of common sense, I feel like.
It's really common sense. Yeah, it is. And the bookkeeping's like gonna be the same. The
Yeah.
only thing that's gonna be different is when you get into more like sales tax, like those things like can are definitely vary.
Yeah.
Like Canada's got like the HST, but only some places,
Mhm.
they like reverted. I haven't followed it very much. Then the VAT tax, like in Europe and all of that, in the EU. So like there's a lot of differences in that regard. But when you're talking about I'm just getting started, here's my business, what are business deductions, what are my business income, it's the same across the board.
Okay, you mentioned sales tax, so I just want to touch on that. Sales tax is so complicated for
Could have
digital
like 10
products.
other webinars about it.
Oh my gosh. I recently started looking into it. Thankfully, TPT does sales tax. I know they do it for the US. I'm actually not sure about international sellers. So they remit sales tax for you. But do you have any advice for that? It's so complicated.
It is complicated. It is. The biggest thing is looking at what are you selling on? So like, are you only selling on marketplace facilitators? So like
Right.
Etsy, TPT, Amazon, like all of these big companies that are going to be remitting the tax for you. If they're doing that, you probably don't need to worry about it at all. I think there was only one state that I can't remember which one it was now. It was up in the Northeast, where even if they were, you still had to file, like if you lived in that state.
I feel like TPT would maybe tell that seller, like, hey, you're in the
No,
state.
why would you think TPT is going to do any of that for you?
Okay, maybe not. I don't
They
know.
don't like. They're like, here's a forum, go read that. Like
Good luck.
they're not trying to hold your hand. Like I went to one TPT conference and I was talking to them about it, and they're like, yeah, no, we rely on third party people like you to help educate.
Oh, wow. Okay, so
They're like,
that's
we
something so
don't.
you need to look into, like, do you need to file for your state?
Yeah, like that's usually like the first one. It's only been like one that I've come across where they
Okay.
do. But again, when you were talking about only selling on marketplace facilitators, the worst case scenario is state is either going to charge you like a percentage of how much tax liability that like you have failed to give them so that you would have like held on to, but you're not holding on to any. And so 0 times any percentage is how much, Lindsay, math teacher?
0.
0, exactly. And so the only thing that we're now worried about is if they have more of a dollar figure penalty. And that I've usually seen as like $20, $100.
Okay.
And at that point, we're like, okay, I will pay that to not have to worry about you at all for probably years before you figure out that I owe you something.
Yeah.
Um,
Man, that is so true. It's
yeah,
very confusing.
It
I
is it is very confusing, but I like to know what rules I'm breaking. Like if I'm going to be breaking rules, I want to know exactly which ones I'm breaking and I want to know what the consequences are to that.
yeah.
That is power. That is the I don't I always like to tell the story also. Obviously I like telling stories. UPS and FedEx, they have $1 million, but now they've probably updated this. But back when I was in school learning about this, they have $1 million budget for parking fees. that is not a tax deduction for them. Like any like fines, penalties, like that's not a tax, that's not tax deductible. So they have in their budget, because it makes more sense for them to park in the middle of the street to deliver their products and then come back and risk a parking fine than it is to find parking, spend all that time. Like they will lose more than $1 million by trying to like follow the law in that. And so every time you see a UPS driver now that's like in your way, causing a bit of a traffic jam, like that was a business risk analysis that they had done where they're like, we're not going to worry about it. We will just pay that fine.
That's too funny.
Yeah. Which
Okay.
is crazy, which is how I kind of feel a little bit about all of like the sales tax when we're talking about Nexus. So when we're talking about like TPT sellers who sell mostly on marketplaces where they're handling the sales tax for you, and then they want to create their own website, which is now they have to figure out their own sales tax.
Right.
So, you know, if you're on WooCommerce or you do Shopify, or like I don't think Kajabi does it. That's kind of more similar to your own website. Those are the times where now you have to figure it out. And until you're like, even if you make $100,000, in order to meet economic nexus in any one state, you typically have to make $100,000 in that state.
In that state, right.
And so you're like, okay, well, if I've only made $100,000, the chances of me having actually made $100,000 in one single state, pretty low. So I usually use that as a kind of a barometer where it's like, okay, after $100,000, you're making like on your website, now start doing more of an analysis of
Right.
kind of what those are. There's other thresholds where it's like 200, it's $100,000 or 200 transactions in a state, which is more likely the TPT seller is going to hit because of just like the high volume, lower cost. My recommendation is always like have a sense of where you're selling into, like where are your sales happening?
Right.
Like that's information that I would want to know regardless of sales tax. You're like, oh, could I tailor this more like specifically to this particular region, like Texas
Yes.
has a lot of they're kind of underfunded and needing more resources, and so there's a lot of sales that happen in there or in another state. And you're like, oh, well, what could interest that state more, like even more. That's my 2 cents on sales tax. That is not necessarily like the popular opinion or necessarily the true and here's exactly how you file it all, but having a bit of a balanced approach and understanding, or having an understanding of like what the thresholds are of knowing like, okay, at this point I need to start thinking about it. Like it becomes a higher risk.
Right.
But if you're just getting started, like don't let that be the thing that is going to keep you from growing your business.
So I just want to quickly just recap that. So if you're on TPT, TPT is remitting your sales tax for you, meaning you don't necessarily have to do anything. However, you may want to look into your state to see if there's like an additional step you need to take because of the state that you live in. I know Georgia, we don't have to. So that would be something that you can look up on your state's government website. And then if you're selling outside of a marketplace, then if you're making $100,000 or more a year, that's when you might want to look into. I actually just did this. So I'm making multiple six figures a year and I just did this and I still haven't hit Nexus in any state. And I used Cuderno, Quaderno, which will link to PayPal and Stripe, which is how I accept payment for my courses because they are higher ticket. So I thought potentially I would have hit Nexus and I still haven't hit Nexus yet. So I'm just going to use Cuderno every 3 months to check, have I hit Nexus? So basically what I'm saying is I don't really think it's something that TPT or sellers alone need to necessarily worry about right now.
Yeah,
Also,
I
I
agree.
will say I reached out to my CPA and she had no clue. She was like, I don't know. The laws keep changing for sales tax for digital products. I can't help you. So a CPA might not necessarily be able to help you. That's
No, they don't.
yeah.
Yeah. And it's hard to compile all of that.
Yeah.
Like I try to do that with, like I've got a spreadsheet that like handles all of it, but like it's a constant like, okay, I have to check this all the time to see if it's still right and like update it. Like
Yeah.
Georgia just started taxing digital goods, I believe it was, starting like January 1st, 2024.
Yeah.
I was like, oh, I kind of missed that one. I was like 6 months late to that. And I was like, oh my God, like it just like keeps, there's
Yeah.
so many, if you're not like on top of it all of the time,
Yes.
it could be really, really frustrating.
Okay. So two more things, I think, and then I think we can wrap this up because this has been a lot, and I don't want to overwhelm people. 1099s.
Yes.
Am I going to get a 1099 from TPT, and what do I do with that?
I don't care about 1099s. I'm going to say it. We
Okay.
don't care about 1099s unless they're wrong. And we
Okay.
only care about 1099s unless they're wrong in a particular direction, if they are overstated.
Okay.
Because if you are doing your own bookkeeping, you don't need a 1099, and your taxes should be based on your own bookkeeping. So if you're relying on a 1099 from somebody else, somebody else's records, you're putting the control into somebody else's hands, and it could be wrong and not kind of line up with what your information says.
Okay.
I have one client that they issued a 1099, which was double what she actually was paid,
Mm,
which would have resulted in $15,000 extra in taxes. If
wow.
it, you'd be like, hey, what is this? This is not what your bookkeeping says, because I insisted she do her bookkeeping.
Yes.
And she ended up just hiring me to do her bookkeeping. I'm like, this is wrong. And she went back and they adjusted it for her, like changed it because the IRS would think, so the 1099 gets given to you, but reported to the IRS. So the IRS would have thought she made twice as much as she did.
Yeah.
And that's going to be an automatic notice if you're going right on based on your bookkeeping, but then the IRS has this erroneous information. Now, if it is wrong in the wrong direct, like they just like underreported, you still have to report all of your income from like that 1099. So for TPT, it's $5,000 this year in 2024. It's going to go down again, presumably, but I know they delayed it several times. It was supposed to go down to, it used to be $20,000 in sales, and that's a 1099K we're talking about right now. So it used to be $20,000 in sales. Hyperwallet would send you the 1099K, and then I guess before that it was like Teacher Synergy, I think. And then now it's going to be anybody who sold $5,000 or more is going to receive a 1099K from Hyperwallet. And next year, I believe they're trying to get it down to 600. So it's going to match that 1099 NEC amount, which is that threshold. But do keep in mind that they're wrong all the time. And if you get issued one where you didn't need to be issued one, it may or may not be a problem. Like you can fight that battle because so for Lindsay, as an example, if you build me like $5,000, but in different like increments in different payment methods. So say I send you a check one time for like $1,200, and then another, I'm going to pay you via PayPal for $800, and then you're going to send me like a QBO payment link, and then I pay you the rest of it on that one. I'm like, wait, okay. So then if I send you a 1099 for like, I paid you all these things for your services, your courses are amazing. I absolutely love them. I send you a 1099 for that $5,000. The IRS is going to think that you have made more than you actually did. Because I should have only sent you a 1099 for $800.
Yeah.
Because that was the one that was paid via check.
Right.
Because you're going to get a 1099K from PayPal, you're going to get a 1099K from the QBO payments, and you're going to get a 1099K from whatever payment method that I might have not actually mentioned.
Right.
In my little example I just made up. So it's really, I know a lot of TPT sellers get confused with it, and especially like in all like the VA services space where they're like trying to figure out who needs one, or like some people are like, I need one, and you're like, you don't need one. I would really rather people just realize that they don't actually want or need them.
Yeah.
You have to report your like all of your income, regardless of whether or not you were given a 1099.
Right.
And we only care about 1099s because we want to know what the IRS thinks they know about our business. I'm going to say that one more time. We only care about 1099s because we want to know what the IRS thinks that they know about our business.
Hmm.
And it might not be right. And that is why your bookkeeping is the thing that is going to highlight whether or not it's right or not.
You know, what's funny is TPT used to pay through PayPal and not Hyperwallet. And so we would get double 1099s from TPT and from PayPal. And I remember when we first hired a CPA and she saw this, she was like, wait, it says you're making double what? And so we had to like just make a note when we filed our taxes, like this is double reported. We're not actually making this much. And
Yeah.
and nothing ever came of it. But I'm like, how many TPT sellers didn't know that? And like,
So many.
I don't know. But now they fixed that with Hyperwallet, so we only get one from Hyperwallet, thankfully. But that's why it's so important to know like how much are you actually earning, and then do your 1099s match that.
Yeah.
Yeah.
And that's the direction you want. You don't want to match your earnings to what the 1099 say. Like you
Yes.
really want to be relying on your own stuff.
What actually comes in. Yeah.
What actually happened. And it's the same with like the 1099K are gross amounts. And
Okay.
TPT does a wonderful job for their own marketing, for their own purposes to really push down your throats earnings.
Hmm.
Because earnings is the gross amount less your commissions, and they focus on the earnings. So then you just like, you're like, blah, 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 like commissions, it's fine. You're only focused on that number. Like you can even go in the app and it won't tell you what your gross sales are. It's only going to show you your earnings.
Right.
And that is a strategy, like a marketing strategy from TPT, and like a good one for them, but it does not reflect the true how you need to be reporting your taxes, which is that gross amount less your tax or less your commissions gives you your earnings. But it's like there's all these other little like home office expenses and like office supplies and your dad spend and all of these other expenses that you're going to have gives you your net income with what you're actually taxed on. But that 1099K, a lot of people get bamboozled because it's the gross amount, but all year, every year, they have been bombarded with earnings, earnings, earnings. Then all of a sudden, it's way higher than what they were expecting. And then they forget that they need to take out the commissions, they need to take out the like TPTs paid sales taxes in there, or the refunds, even.
Yeah.
Like any of those, you get the breakdown, which is why you also want to be printing out your sales and earnings statement and make sure that that's part like those items are also checked off in your bookkeeping. And if you're like unsure, like also send that like if you have an accountant, like you should be like if somebody else is preparing your taxes, they're gonna want your 1099s, your earnings statement, and your bookkeeping. They're gonna want all of those things to
Right.
just like double check everything.
That's good. I feel like there are very little TPTers who are doing that right now. So,
Yeah. And even then, a lot of tax preparers, if they're not preparing your bookkeeping, they're not reviewing whether or not like your bookkeeping is accurate. Unless they like specifically say that, like you can give them some things, but like they're going to like, especially if you've already included them in your bookkeeping and it's not obvious for them to just like kind of like one-to-one mark these off on from like the sales and earnings statement, they might be double reporting like your expenses. Like they might be missing things like they're not gonna know. They don't know, like they don't see like all the bank detail. They just see these like kind of high level things and they're trying to kind of balance them. They're like, yeah, it's like close. But that's how that works. So if there are errors in your bookkeeping, there's gonna be errors in your tax return. And so you really want to nail the bookkeeping part of it and make sure that everything's included. And then if that's right, your taxes are gonna be right and they're gonna be a lot easier.
okay, that was really good. Last thing I wanted to ask you about is S corps. When TPT sellers get bigger, they're making more money. When should they think about moving their LLC to an S corp?
So that one depends.
Yeah.
It's always going to depend, you know. So the benefit of being an S, like electing to be an S corporation, comes in the payroll tax savings. So right now, like if you file as a Schedule C, you're going to be paying two types of taxes, which is the self-employment tax and income tax. The self-employment tax is the one that we want to save on by electing to be an S corporation. And that is by setting up the owner who does work for the business as an employee on payroll. And so we want that number to be whatever the reasonable compensation for that person, like that owner doing business, like doing work in the business, we want that to be as low as possible. And then we figure out, okay, like based on what our net income is and that reasonable salary, we're able to do an analysis to figure out what is that net income amount where we're going to hit that break even point. Because I cannot stress this enough. If you elect to be an S corporation too soon, you will pay more in taxes. Like there is a break even point.
Yeah.
So there is this entity is better for you versus this other one when you hit like certain thresholds. And because that's a moving target based on, well, Lindsay, how often do you work in your business? Like if you're working like 80-hour weeks, right? Like you're going to be full time and you're going to like, and how are like, if you were to replace yourself, how would you replace yourself? Are you going to be hiring stateside workers where the wages are a lot higher? Or are you going to look abroad? And some people have very strong feelings about it and great. but that is going to impact what that threshold is. And like at what point. And so some people can hit it a lot sooner because they're like, heck yeah, I'm all for hiring over in the Philippines or in India or any other cheap country, as opposed to somebody who only wants to hire somebody for $30, $40 an hour stateside. Or somebody who's like working really, really hard in their business and they're like, I'm going like all out. I am 40, 50, 60 hours a week. Or somebody like I've met somebody, she's like, yeah, I work on it like 4 hours a month.
Wow.
Like, okay, that's very passive. So the more passive your business can be, the more likely you're going to you'll hit that transition point to wanting to be an S corporation sooner. And so I don't really have like specific numbers for you because it kind of like depends on those things. But I would say just as a somewhat general rule, if you are not spending that much time in your business because you're working full time somewhere else and it's only like part time for you and you can just like add your hours, you know, in the summertime when you're off teaching and you would be willing to, you know, hire abroad, then that number is maybe closer to like $50,000 in net income where you want to start having that conversation. But if it's on the other end, you're looking at like 130 before you want to start talking to an accountant. So like, hey, can we just check this again? And like,
Right.
is this now the right time?
Right.
Um,
It's definitely something an account and a CPA should advise you to do.
Yes. Yeah, don't go in that blindly. That is a tax plan that you want to plan for.
Right.
And that is one that is one of my favorite things to do in our tax efficiency analysis because what it does is it allows you to know what that those targets are. And
Right.
as soon as you're like approaching those, you can start thinking about them. You can like schedule another call with me. We'll do it again and make sure that like it's still right for you based on how you are operating in your business. And that is huge. Like to have no like, hey, what's the threshold? Like how low can you go? Or like how much buffer do you want? Because the thing that I really like I loathe the most is when somebody is like a new client comes to me and they've been on TPT for a while or whatever other business they were previously, but now I work exclusively with the TPT community. They'll come to me and I'm like, do an S corp analysis. I'm like, yes, you should be one. For the last 5 years, you should have been one.
Hmm.
And that would have saved you $30,000.
Yeah.
Sorry. Like we can only do this moving forward.
Right.
And so like that always like just kind of like, ugh, like I hate to tell you this, but you missed out on this because you didn't just like come seek advice
Right.
at the right time. And
Right.
so if you just have those numbers that like 50,000 or that 130,000 like in the back of your brain, like do a little analysis and like with a professional and it's so much better.
Yes.
And if your accountant isn't asking you detailed questions about how you work in your business, they're like, oh yeah, no, your salary is just gonna be like 60. We're just gonna like set it at like 60. Like, what?
Are you
Like that is a huge red flag, okay? Like do not rely on that. Go through the motions of, okay, well, how much time do you spend on product development? How much time do you spend on marketing? How much time do you spend on managing your employees? How much time do you spend running business errands? Like how much time do you spend answering FAQs and doing admin tasks? And then like, okay, well, how much would it cost you to hire a marketing person? How much time would it cost you to hire someone to develop the products for you? How much how much would it cost you to have somebody else run your business errands? And until you go through all of that, like your accountant doesn't know how you spend your time. And if they're not asking it, they are not going to know how much your time is worth and how much your salary is worth. There isn't a Glassdoor, there isn't an Indeed that's going to tell you what like this position is going to be worth, right? Like if you're like accounting one position, like that's easy. I can go look that up. But for this type of stuff, no.
very nuanced.
Very nuanced. And so do not take a like, oh yeah, it's roughly this, but they have no clue, like red flag.
It's good to know.
Yeah.
Very good. Okay, well, this was awesome. I feel like TPTers and even other digital product creators have gotten so much value from this. So I always ask all of my guests this, and then I'll let them know where they can find you. But what is one act of generosity you have done? It can be personal, business, in your life lately or in the past.
Oh my gosh, I don't even know where to start on all that. A lot of the time, I like to think of anytime I, turn my discovery call into a how much information can I just give
Yes.
away for free. And a lot of the time, honestly, like I give away too much stuff for free. Back when Rachel was working for me, like a couple years ago, she's like, Emma, you give away too much stuff for free. Um, I just do. I like it.
Yeah.
But one of the things that I'm really excited about that we're working on creating right now is that's still in the works, but because we're building an app, we're building a bookkeeping app. And because I want people to be able to feel comfortable and confident in their bookkeeping. And so we have a spreadsheet now, but like formulas, they can get messed up and people don't know how to use spreadsheets all the time. So we're building an app. And what my goal is for this app is to have all of the information, the documents, like being able to track your home office and your mileage, those things that like shouldn't show up on those like the business bank account that we're talking about, like those mixed use things,
Yeah.
being able to track all of that in your bookkeeping from the start. And the exciting part that like I'm like, you know what, part of what I want to give back to this community is for all of those like new sellers or the sellers that are not making a ton of money right now, is that if you are making like less than a certain threshold, which I haven't figured out how much that is, then it's free.
That's great.
Is what I want everybody who is starting, like new entrepreneurs, to not have that barrier to entry of like being too scared not to have accounting, like, or be like, it costs too much. Like I can't afford that just yet. I haven't made sales. It's like, no, it's free. You should do it right now. Do it right now. And that is something that I'm really excited to have coming in the works, but it's not done yet.
I love that. Well, we can't wait for that to be done. I know that will be helpful to so many sellers. Emily, this is awesome. Thank you so much. It's very obvious that you love to serve and you love to educate, and we all need all the tax help that we can get. So thank you for being here. Let everyone know where they can find you.
So the easiest way is our website. It's all about ACCTG, I know it's accounting abbreviated.com. I get in trouble for that from my friend who's also in the TPT space, also in website design. She's like, Emily, your website, come on, you needed a better name. But that is it. If you just Google all about accounting, it will show up.
We'll put it in the show notes too.
Exactly. That's where you can go schedule links. You can see the products, the resources that we have that are designed for those smaller sellers or even big sellers, but they're just products that are going to help educate you. Many of them are for free. Some of them are paid, but they're going to kind of help you along. And that's where you could schedule time with me also.
Perfect. Well, thank you so much, Emily, for being here. This was awesome, and we'll talk later.
Thank you.